Welcome back to Stock Talk Trades. This is probably one of the most using patterns, using different candles. That is one thing, but without volume, you are going in blind. You don't know what the market makers and institutional traders are doing, but with this strategy, volume price analysis, you'll have much better awareness about when to get out, when to get in. So let's jump right into it. We're first going to talk about how volume needs to validate the price action. So let's go ahead and draw a candle. Let's go ahead and talk about, these are our volume bars, This is our actual price action. Think of this as maybe this is a green candle and this is a red. From the open to the close of this candle is called the spread. When you look at the spread, if we have a large spread, you want to have a large volume. For example, since we have large volume with a large spread, that means that this volume validated the price action. And same for here. Let's say we come down a little bit, low spread with light volume. There you go. The price action and volume, they match and they're validated each other. Now, what if we have a large spread with very light volume? Again, this is an anomaly. Since we have a large spread with light volume, that means the market makers are forcing the price down, but they're not jumping in on the move. If we have a large spread, we want a large volume bar, but that's not the case here. So expect it to maybe, we might come down a little bit more, but then we might reverse. It might be a short-term reversal or just a small pullback. That's up to you to decide. Now let's actually look what an anomaly is and how I can explain it to you guys so you can use it with your VPA. We have increasing volume as we are increasing in spread. So this is a good sign that the price action is validating. With small spread, low volume bar, perfect, check. Price action is validated by volume. Bigger spread, larger increase in volume, check, check. And again, increase in spread. And then at the top of this, we see a nice doji candle. But we have a low spread, very low spread, but with high volume. This is where the alarm bells should be going off in your head, saying that the market might make a turn or it could continue going. You have to really see what the next couple candles are, but this should be the first sign of potentially getting out if you were able to catch this move and jump in here. Let's jump in a little deeper on why. So as we have increasing volume with increasing spread to the upside, we know that more buyers are jumping in and jumping in and jumping in and jumping in with this increase. But now that we have a doji candle, the buyers were matched with almost the exact same amount of sellers. That means we have increasing volume. This could, if the sellers take control, we can see a reversal and continue lower. This might just be a slight pullback before a continuation. We'll have to see. Again, this is where we want decreasing volume on this pullback and to see it continue higher. But if we have validation of volume and price action to continue lower, then we are going to continue lower. That's why volume price analysis is so important. That's why every single trader needs to know it. Now let's talk about stopping volume. It's almost like the previous we just talked about, but stopping volume works in both ways. All of this works in both ways, up or down. And as we have increasing in price, but our spreads are getting weaker, we are having an increase in volume. Since our spreads are getting weaker, this is meaning that sellers are also jumping in. And price action alone, you wouldn't know this because you don't have volume. So you think, oh, buyers are winning, and then immediately reverse. But if you use volume price analysis, you will know because we have a smaller spread. So the sellers are actually jumping in. And let's say there's a nice resistance here, and this would give you a clear indication that, I should take some profits if I enter down here. Now let's talk about how we can use volume price analysis to confirm if it's a fake out or if it's a genuine move. So let's say we have a nice downtrend on the play. We have 1 touch, 2 touch, 3 touch, and after the 3rd touch, we make a nice pullback and then a higher low. We have a 80-20 setup on our hands. But that's not always the case. And what if we break out, the market happens, but we don't have any volume? What is, say, our volume, again, relative volume? We have high volume compared to the relative candles. But let's say we don't. Let's say our volume's down here. Then we can expect the market to kind of maybe pull back again and kind of fall back into this pattern But if we have increasing volume, we can see that the traders and institutionals are also seeing this trend line and or seeing this move, whatever pattern, price action, and they're actually hopping in for the move higher. And this is really the only way to tell if it's a false breakout or if it's going to be a fake out. It's volume. Volume is key. Now let's look at some real life examples. So we have a big volume or spread with low volume. So, and then even a bigger volume, but with an even smaller spread. There's our first signal. Again, it doesn't turn on a dime. The market takes a little bit. Lighter volume with a lighter spread or smaller spread, and then we kind of hit a reversal. You know, we have a lot of volume with a lot of potential to move down, and then we are caught by buyers. The buyers were able to step in and actually make a doji candle before continuing higher. Let's look at a little bit better of a move. Let's take a look at Bitcoin. See how we've been like with increasing volume, increasing volume, increasing volume. Then we had a very, very large volume bar, much, much higher than the previous, but with an even tighter spread. This is giving us an indication that the sellers are also going to take control and continue coming in. We have a slight pullback. We have very light volume on the pullback, so you're able to actually catch this move higher. If you're able to do it, let's go ahead and take a peek at what could happen right now. Again, light volume doji candles, more volume. Again, you have to look at every single candle individually and the volume bars individually. Again, it's all relative. So let's go ahead and go down the line. Doji candle, light volume, larger spread, larger volume. Okay, light spread, lighter volume. Increasing in volume, lighter spread. This is giving me a potential indication that the sellers might be entering. Light volume, larger spread, and now we have increasing volume. We have 4 days left. This is an open candle, so I'm not going to try to do this. Ethereum is looking very, very good. We have increasing volume, increasing in spread, or increasing in price. Light volume on this pullback. Next target should be around $4,400. Here's another very good example. We're on XRP, weekly chart. We have increasing in volume, increasing in price, but see how this volume bar is only like double the amount of this volume bar? See how this spread is also this candle spread is way more than double of this candle spread. And this is telling me that there's no sellers right now, but this is an anomaly. It's not really matching the price action. The volume is not matching the price action. So at the end of this candle, you could have closed and you would have been able to capitalize and get a lower price. We do have decreasing volume on this pullback, so I do expect it to continue higher. And thank you guys so much for watching. Go ahead and comment down below what you guys want to see next. If you have any questions about volume price analysis, I really highly suggest reading the book, A Complete Guide to Volume Price Analysis. It's on Amazon, it's on Prime. I think you guys could really find a lot of value from it if you're trying to trade. Thank you guys so much. Love y'all. Peace.